Welcome to TradeTheNBI.com. This is John. This report is for the 4th of May. Not a whole lot of surprises here. We were expecting to move back towards the 23% with the NBI magenta leading here, as well as we had already the dip of orange below. So midterm buyers filling in the slack, and we thought that once we reached that zero that it would be attractive potentially for buyback corporations as well as institutions to feel their way into the setup, given that there's so many knowns about the problems that exist. It presents an opportunity to trade against the crowd, so to speak, and as the crowd changes, we should just reflect on that here. That's the year to date from the beginning of the year, minus 12% roughly. NBI White's still leading this, but as long as the magenta continues to accelerate, and even with this orange dipping back down again, those are positives. Of course, it comes very easy because 41.91 is the 23%, and got to get over that in order to really progress anywhere. It becomes a significant resistance because you can see that the high of the day was just right about 95, so it got just over it and wasn't able to sustain anything. NASDAQ further behind, but you get the red leading here too, which is also a bit weaker than you would expect. Doesn't mean you can't still continue, and oftentimes you'll get a series of moves above, but when that does, the magenta does pivot lower. That usually causes a pullback, a significant one at least when that takes place. The euro, euro was kind of fun because let me show you from a 15-minute chart standpoint. You see this massive move, this uncommon for nothing significant taking place. Of course, you could see it was all on positive extremes, so it was a significant algo activity. But even if it were central banks or some effect trying to hold this 105 line, this gets pretty desperate every time we get very close to it and even begin to breach it. It's like, oh, we got to jump in there, and they do. But nobody wants euros, nobody wants yen. They're a disaster, and that's not going to change anytime soon. So, which puts some pressure on the S&P because some earnings are derived from that standpoint. But bigger picture, it's more about what's going on with the Russian war. Subsequently, you need gold to be depressed because elevated gold only reflects the fact that inflationary pressures are still out of control. Some will argue that they've been stabilized with oil and that not really moving much. But there's some potential risks that still exists out there. The readings, of course, negative way back over here. When we had the magenta dipping down below, none of that's changed. We had the pivot of orange, but it never got below the red DOC, and just now we're seeing a little tick up of midterm buyers, but shorts fading a little bit, so they're going to collect their paper profits on that one. It'll be interesting because as the Russian model develops with the gold, with commodities for the ruble, it's going to be hard-pressed for other currencies to compete against that without making some adjustments. The dollar will be okay in the sense that it has, it's traded in oil and all the other commodities are traded in dollars, so kind of protected, but I think that even the pound might suffer some pullback on that as well. From an oil standpoint, still over the 100 mark, and as long as that remains, it's not a pretty picture from an economic standpoint because it just draws money out, which from a Fed standpoint, not a bad thing because you soften the economy by pulling out resources. You have market volatility, which causes people to move towards Treasuries. All the things the Fed wants to try and calm things down a bit. So, playing a little bit longer game, they're thinking that they can soften the blow, and that will allow everyone to become used to elevated prices, and then continue their subtle rate increases until they reach an equilibrium. From a TLT standpoint, and we're still just over the almost 118 range, but again, still looking for that to continue to move lower towards the 115. Bitcoin, not getting any support at this particular point. Now we're moving down to that 37, so that 34 area comes back into play, and it's kind of a maturity for it because I think it's been pretty consistent. We've seen Similar effect with ETH. Let's put that one up real quick there. Ethereum, pretty clean from its algorithmic trading portion, and that makes it very effective as a vehicle. And I know that that's going to interest other investors instead of necessarily gold, and that they can move into a future crypto and that as a hedge kind of effect. 50K chart, we had the nice bounce, and then we just pretty much have gone nowhere. It's just been blah, so to speak. Intraday, we had a lot of moves back and forth early on, and it was pretty inconsistent directionally. And colors were still right, and then we started to get some moves towards the peaks, and that's when we started to get a little bit more creative activity as we bounced up and down, and caught the turnarounds here and there. This one over here was a little bit interesting. It's a tougher read where you have white MBI leading, magenta is over yellow. In this particular case, that's where I was looking at the DOC, because if I got green leading the case, that's a bullish configuration. That should have been green right there. That's that overtake. Now, if cyan were still leading, I think I'd be still more skeptical about it. Still have plenty of back and forth, because that is an indication of a little weakness there with that MBI white leading the run on that, and then it clearly got over the top on it, but pushed to the 100, and then the break down below 33 with both the yellow and magenta with white rising, and boom, that just took it all the way back. Didn't make it to the zero. So once that turnaround with the magenta there, this time leading the white, created a much stronger push, and then we got a series of back and forth sell signals, longs back to the 100%, forming broader double top, so to speak. But then you get the double whammy sell signals with the lower pivot of magenta, and that just made it easy. And that one actually broke the lows, because that was pretty significant from a dominance signal right there. And then late in the day, programs coming back again, just like they have been. So it's becoming pretty consistent as to how they're approaching it. Intraday movements, and if it's it didn't even seem to matter where it was, because the other day they moved it 40, 50 points in a matter of minutes. So that's why you should stick with the readings, and that's the easiest way to go. Pretty clean overall, given how much movement there was on the day. But as always, though, I'll continue to update you on Skype chat. Trade well. We'll talk to you later.